Well, it's safe to say that the San Diego real estate market did not crash as many people were predicting. This is the July market update for San Diego County. My name is Clemens Ruas with the Romero Ruas Group at Berkshire Hathaway, and here we go. All right, so interest rates did not really move the last month. We ended up at 6.71% for the month of June. We started at 6.79, so just a slight decrease there. You can kind of see from the graph, it decreased and then it kind of increased again at the end of the month. Compared to the same time last year, we're at 5.7%. Who knows, hopefully by the end of the year, interest rates might start coming down. But with the good jobs report and the overall good economy, who knows if that's something that the Fed is really looking for. That is why kind of inventory has been muted. A lot of sellers don't want to sell and get rid of their 3% mortgages. Again, about, I think it was 71% of homeowners with a mortgage have interest rates below 4%. So you can see why that is definitely not enticing for a seller to get rid of. And we saw a slight decrease, about 5.9% from May. And as you can see from this graph, usually 22 we had an increase in the spring season, 21 we had an increase in the spring summer season. Again, here 2020 we had a slight increase. Again, that was muted because of COVID, so that's why this area is kind of flat here. 2019 we saw an increase again in the summer. 2018 it was pretty much all an increase, all up to the end of the year. And we can see here, for this year, we did not have a decrease. We actually had we didn't have an increase. We actually had a decrease. So hopefully that will change soon. But if that does not change, then prices won't come down. As we can see, inventory increased last year about 28% compared to that negative growth for 5.9%. And we are about 56% less in inventory than we were last. Pending sales increased about 2.2%. Again, this is a little bit muted because of the lack of inventory, number one, and number two, the higher interest rates. So we are in a multiple offer scenario, but sales are still muted because of low inventory. Compared to that same time last year, there was a 20% decrease from May to June, and we are about 7% less in sales than we were last year. This peak right here is kind of where the interest rate started to increase and sales started to become muted, and that's why this was also depressed. But if we were to look back at 2021, that peak would have probably continued for the summer months and started coming down in October, somewhere around that range. All right, so prices actually, they remained kind of the same between May to June. We're at $561 a square foot. That is about $1 million for the medium priced home. And compared to that same time last year, we saw a 5.7 decrease in home prices. We were at 549 or 18% less in price than we are last year. And market time actually decreased to 17 days on the market. Compared to that same time last year, we had 14 days on the market, which was really quick. 17 days is fairly quickly as well. So we are seeing multiple counter offers. If you are submitting offers, definitely submit a strong offer with almost no contingencies if you can, and a shortened time period. That is about 21% less than we have right now. The difference from the sales price to the list price, we saw an increase to 101.5. So here, reiterating that there are multiple offers on properties and properties are actually going again above their asking price. Compared at the same time last year, they were at 104.6. So a little bit faster, a little bit more competitive last year. But if inventory again does not increase, or if interest rates don't increase further, then we will see this number kind of remained around the same. Luxury sales remained the same to 158. That is 27% less than we had last year. Luxury inventory actually increased by 1.4%. We are about 15% less in inventory than we were last year. Again, if you have any questions or would like to track your home's value, please log on to www.mysandiego.com or connect with us via this QR code or any of the links on this video. Again, thank you very much for watching and have a great day. See you next time.